Hello and welcome to this week's Australian Stock Market Report. Now this week we're going to look at how you can achieve a 21,000% better return than using buy and hold. Then we'll get into the Australian stock market so I can share with you my thoughts on where it's heading, along with answering your questions and looking at stocks for you. Hello, I'm Dale Gillham, the Chief Analyst here at Wealth Within, and we're Australia's most trusted stock market educators. Now before we move on, thank you for showing your support for our channel and hitting that subscribe button. And remember, as you subscribe, click the bell on the right of it so you keep up to date with our latest videos. Also, remember to tune into our live Australian stock market show, which is on every Tuesday, 7 to 8 p.m. Australian Eastern Time. Now, this is the show where you get to ask us, the stock market education and trading experts, to look at your favourite stocks and answer all of your questions. Now, this year has been a bit of a roller coaster for the Australian stock market, given that it achieved a new all-time high before falling over 11% in January. Now, February was a similar story as the market rose strongly for 2 weeks before falling heavily over the next 2 weeks. Now, this volatility, together with speculation around inflation, interest rates, and now the Russian invasion of Ukraine, has caused some investors to panic and exit the market, whilst others have chosen to remain in the market to ride out the swings. But is this wise? Now, I recently read an article from CNBC based on research from the Bank of America around the difficulties of timing the market, which showed the returns from each decade on the S&P 500 from 1930 to 2020. Now, the research indicated that if you bought and held through that time, your return would have been a whopping 17,715%. They also provided returns on portfolios that excluded the best and worst 10 days in each decade. As justification for promoting a buy and hold strategy, investors are constantly told that if we miss the best 10 days when the market is rising, our return will reduce substantially. However, since I launched my best-selling book, How to Beat the Managed Funds by 20%, around 2 decades ago, I've been educating investors that this assumption is incorrect and that the opposite is actually true, because if you avoid the 10 worst days, your returns would increase substantially. Remember, the market doesn't crash up. The research from the Bank of America now substantiates what I've been teaching our clients. While the buy and hold strategy achieved a return of 17,715%, if you avoided the 10 best days each decade, the return was a measly 28%, which is why buy and hold is a marketable strategy in the financial services industry. But if you were out of the market on the 10 worst days, the Bank of America research shows your return would have been a massive, wait for it, 3,793,787% better, or over 21,000% better than a buy and hold over the period. Whilst I don't advocate that investors panic and sell or react emotionally to news and speculation, it is obvious from the research that being a little more proactive with your investments by avoiding the large downturns in the stock market is a far better strategy for your portfolio in the long run. Now it's time we get into what were the best and worst performing sectors last week. Well, the best performing sectors included energy, and that was up 8.85%, followed by materials up 8.14%, and utilities, that was up 0.93%. Now, the worst performing sectors included consumer staples, and that was down 1.64%. This was followed by financials, down 1.52%, and healthcare, that was down 0.91%. Now, the best performers in the S&P ASX Top 100 stocks included Woodside Petroleum, which was up 12.42%, followed by Lynas Rare Earths, up 12.23%, and S32, that was up 11.90%. The worst performing stocks, they included Magellan Financial Group, down 12.94%, followed by QB Insurance, and that was down 9%, and Virgin Money, that was down 8.62%. So what do I expect in the market moving forward? Well, let's get into the charts for our S&P 500 All Ordinaries Index update for this week. We'll also answer your questions and look at the stocks that you've chosen for me. Well, last week was a better week on the Australian stock market. I think it was up just over almost 2%. It was high 1% last week, which is really, really nice. But it was more earlier in the week. Friday was a little bit weak, and Friday was actually a down day on our market, just to continue on that sort of signs of weakness in our market, which it has displayed over the last sort of month. But let's go and have a look at the charts to see exactly what is happening and whether that low has happened or whether we can expect a bull market from now on in. But let's go and look at the charts. Again, on the left is the monthly chart, on the right is our weekly chart, and I haven't changed these from last week. I've not put anything on them, and you can see here currently this is the February bar, or sorry, the March bar, sorry if I get it right. So it's only a few days in this bar, but you can see it's a nice small bar, but you can see the weakness through here, which is February, open, pushed right up, came right back down in that bottom part of the bar. So that's what I mean by the weakness. But really, if you look at this, since that whole all-time high that we had back in August, it really hasn't been super strong. Indecision, strongish sort of bar, but then we got pushed up to make a new all-time high there in January, came right back down, which is what I was talking about earlier in this report, where we fell down over 11%. We actually fell 11.62%. Now, I was expecting this fall down, and I was expecting 8 to 12%, so it still is possible. As I keep saying, it is possible, that is the low. But we're not moving on, and people can say, well, that's interest rates, that's inflation, that's the war in Ukraine. They can say a whole lot of things about what is causing this, but right now indecision is just not another, means there's not a lot of confidence in the market right now. But let's go and have a look at the weekly chart, because we need to determine whether this is now the start of a bull run or whether the market's going to turn down and that low will be broken and we'll go down to under 7,000 points, possibly to 6,800 points. But again, I know I keep saying this, I don't think our market's crashing, and I know a couple of weeks ago there were a lot of posts on the thing when I said that, and people saying to me, the market's already crashing, Dale. Well, still doesn't look like it's crashing to me, and one day somebody will be right whether it's crashing or not, but that's not really the point what I try and get through in these recordings. Whether the market's crashing or being bullish is irrelevant. What your strategy is to your portfolio is much more relevant, because you don't buy or sell the market, you buy and sell stocks. But let's go and have a look at the weekly chart, and you can see all this indecision through here. As I said, that's that August all-time high that we had. Even the week of that new all-time high that we made in January, it sort of started there, pushed up, came back down again and closed where it started from. So there's a lot of indecision here. Even the last few weeks we've seen one strong bar through here, then indecision, bearish. And here's the one I was talking about. This is last week. We opened up nicely, we moved up beautifully earlier on in the week, but if I go down to a daily chart, you'll see here our Friday open. So we're looking at Monday, Tuesday, Wednesday, Thursday. Thursday showed a little bit of weakness coming off the top there, but Friday, open high, pushed down, came back to be halfway up. So that's a good sign. So it is possible that, early this week we might see a move up through here. And if we do, that's great. But we really do need to get through these sorts of highs here, that 7646, before I'm really going to call that low there is the low that we've been expecting. If we get down days Monday, Tuesday, Wednesday, and we start breaking that low there at 7225, then I would suggest that's going to be in danger of being broken, that 7031 low there, and we will go through 7,000 points, possibly to that 6,800 points. But again, I'm not really worried about the market. I don't think it's going to crash, but there's just indecision and weakness. This is why I've been saying to people, it's too early to tell, and I've been saying to people for a couple of months, be very careful about what you're buying, and be very selective in your stocks. Just buying stocks because they're cheap, or you believe they're cheap, is not really a smart strategy. So what can happen from here? It really depends on this week. If this week we see an up bar, which means it breaks the high of this bar here, which it means it gets through 7,491 points, starts to move up, then that might it really starts to turn the pendulum to being more bullish. But as I was saying, until it breaks through that high there at 7,646 points, I'm not going to call the low or this week as being the low. So, but if we do get another down week and it goes below that low there of 7,249 and most definitely this one here, 7,225, then I would suggest that's going to get broken. That's what I'm saying. So be careful. At the moment, now's really sort of the time to really sit on your hands, I suppose, and not try and trade, not trying to pick bottoms, not trying to pick cheap stock, hoping they're going, hoping that they're going to go up on you. Right now is the time to sit back and watch. And good traders know when there are times to trade and there are times to go and play golf. And so there are times during the year, good traders, we just sit back and watch. We just don't go and play, because you play when the risk is low, you don't trade when the risk is high. So until you really confirm really confirm a move, and you don't do that by listening to the news, watching the news reports every day, and watching all these experts telling you all they think about what's going on in the news and the economy doesn't really help you make great solid investment decisions. You really need to do the research yourself and look at the charts, and the direction of this chart, or the All Ordinaries Index chart, is still technically down. So as a trader, I need to assume it's going to continue to be down until it's not. And that's the point, is when is it not going down? And that's about what we talk about constantly, is about buy on confirmation and sell on confirmation. Right now, there's no confirmation for us to buy. Now, stocks may be giving us buy recommendations, but stocks also may be giving us sell recommendations. When the market's more bearish, you're going to get more sell recommendations, but it doesn't mean you're not going to get buys. And the inverse is correct in the bull market. You're going to get more buy recommendations, less sell ones. So just look at your portfolio, make sure you've got exit strategies on the stocks that you own. Doesn't mean exiting the market completely, even if the market goes down this week or over the next couple of weeks. But right now, I'd be expecting a low pretty soon, not too far. If we haven't already had the low, I'd be expecting the low to come in pretty soon, and for us to be more bullish for the rest of the year. But let's now go to your questions for us. The first question we have today is from Joe, who says, "Hi Dale, halfway through your book and I've held 2,000 BHP shares for about a month and would like to receive franking credits from the dividend, but I'm not sure if I want to hold them for another 15 days to be entitled to the credits. I would like to get around $29 mark in the next 2 weeks. What are your thoughts?" Then 3 days later, Joe came back and he added, "Wealth Within, I just sold them this morning for $49.60 forgoing the franking credits, but made a great return for the month plus a 4K dividend check. I think it was the right decision, always looking to gain knowledge. Cheers, Joe." So let's go and have a look at BHP, because to be perfectly honest, Joe, what you did, I think, was a mistake. And part of the reason is, don't go to the chart at the moment. To me, what you did was you made decisions based on fear, not on fact, because obviously the war, Russia attacking Ukraine, all the talk around interest rates and inflation, all that sort of stuff, you were worried about losing some of the gain that you'd made. Now, there's two things here. One is, I do not ever make a decision based on tax. And I don't ever make a decision, almost never make a decision based on dividend yields. So whatever that may be, because look at the franking credits on those shares may have been X dollars for you. So whatever that is. But if you make a decision to exit a stock and it goes up, as in the case of BHP, well, what are you standing to gain and what were you standing to lose? And the reason why you exited is because you didn't want to lose some of the capital because you're worried about BHP falling away. That's what I'm saying, is you based your decision on fear. Now, if you're one of my traders that we mentor all the way through our course and after our course, and if you had rules around that stock and you broke your rules, and yet you still made money, then I would tell you that was a bad trade. Because trading well means trade following your rules, whether you make money or not. It's about having rules around that and following a good trading strategy. And that's what my comment is about you, is BHP is a great stock. But what your strategy was flawed, and that's really what you've brought up in here. To me, I think you were guessing. You're probably guessing to get in, but I don't know that, because I don't know how you got in, what your intention was, whether you were short, medium, long term, what rules you used to get into BHP and why you got into BHP. But I certainly know you had no rules to get out of it, and that would suggest you didn't really have good rules to get into it. I'm not trying to be rude to you or mean. All I'm saying is you need to make more a solid strategy around what you're actually doing. But obviously losing those franking credits is not a big deal, because right now you've exited that stock and BHP is moving up, and had not proved it started to fall away. So fear ruled your day, and that's what causes a lot of people to make mistakes. Let's go and have a look at the chart, because right now you're probably thinking, wow, I got out of it. And so you got out at 49, was it 49.60? So let me put my little tool on here, 49. 60 roughly, there it is. So roughly it's risen another 2.6% at this point in time since you exited the stock. Now, whatever that is in dollar terms, you'll be able to work out. But what if BHP goes up to 54 or 55 or $56? Then you're looking at some dollars, and all that time it's going up, you'll be kicking yourself for exiting, because this one move doesn't prove that BHP's fallen down. And that's what you looked at that prior week, that week when you sent me the email. I think you said it, probably sent it to me probably really early here in this week here, or last week, because 3 days later, as you said, you mentioned you sold it. So you would have sent it here, sent me the message there on YouTube, knowing that was happening. But that's not a reason to exit BHP. And as I said, right now, the decision hasn't been a good one. Now, I don't want to harp on this, but it's about having good rules around stocks, good entry, good exit rules around a stock. Now, you've held it for a month, so obviously you probably bought it somewhere in around here. You held it and you've made some good money on it, and you're quite happy with that, but that's good. But again, my point is, don't celebrate this as a win, because again, as I said, that used that four-letter word, FEAR, and that caused you to make an emotional decision to exit the stock. Not a good strategy in my book. As I said, if you've been watching our videos long enough, you'll know that Janine and I constantly say you need to have a strategy to enter and a strategy to exit and manage your money. But you're out now, and so go look for some more trades. But thank you for your question. Now, the next one we do have is from ASXWA, who says, "Hi Dale, many thanks and appreciate what you do for people. Now, the best channel for the Australian stock market knowledge for sure." Thank you very much for that nice comment. We like to hope we do. I mean, Janine and I are experts. We manage money for people. We manage tens of millions of dollars. We teach people. We've been doing that for, closer to 30 years than 20 years, that's for sure. Whereas most people on YouTube are not professionals at what they do. And I'm not saying they're not good, but I'm just saying this is our business, is helping and teaching people. So obviously, thank you for picking that up, And we do things a hell of a lot differently than a lot of people that you might see on YouTube, because we just want to give back and help, and hopefully help people make better investment decisions and make sure they're, how do I say it? They're not acting out of fear like our the last email, and making sure you're making rational decisions based on knowledge, based on good, solid research. But thank you very much for your comment. Now, I really want to get into your email. You go on to say, really love your show and advice for general people. Anyway, I'm here to ask your opinion on A2 milk. As this point, I entered at $4.99 on the 24th of January. Thought it's a very low risk entry and probably a Wyckoff spring. Appreciate your views on the stock based on fundamental and address growth plan by the management recently. So let's go and have a look at that. So you entered on the 29th of January. I'll bring it up on the thing here. And again, I think you've done the wrong thing as well. So you're not going to get out of this one scot-free as well. But let me bring that up. It was a high-risk trade. And so the 29th of January would have been in around there, that week there. So there you go. So that's the week of Friday the 28th. So the 29th would have been that bar there. So if I go down onto a daily chart, you'll actually see the 29th. So that's the 28th. No, it's the 18th of February. Sorry. 29th. Where am I going? I went the wrong way, wasn't it? Sorry, 29th of January. What are you doing, Dale? Go the other way. Where is it? Here we go. February 1st, this bar here. So that was the low. So that's the 29th. No, that's 31st. There's 20s. Okay. I got the date wrong. So therefore, you're seeing that low. That was that major low that we saw, and you bought in right on this area, really high risk area, buying at the end of January there. There was no real signal to get into it. You did say, you mentioned that, I think it was the Wyckoff spring or whatever it is. That you really need to be careful about using some of the things that you might read or see on the internet. I had a look at the Wyckoff spring. I've never used it. I've never tested it. And generally when I see something like that and somebody brings it up to me, I'd go and test it. But I looked at this and I went, nah. And part of I said no because I don't think it's a solid strategy. But you need to make sure you take things in context, not out of context. Now, I don't know whether you're short, medium or long term in your trade or what your intention was with A2 milk. I really don't know. If you said to me my intention was to buy and hold for 3 or 4 days, then a Wyckoff string may have been, and I say may have been, the right entry into that, but I doubt it. It does look to me like it's a very short-term entry type of strategy, nothing for medium to longer term. So if you're more medium to longer term, I just throw that out of the window. It's not a good strategy for that from what I'm seeing. Now, I could go and test it, and I'm saying I'm my provision on my comments is I haven't tested it against other rules and tools, but knowing what it is and having a look at what it is, I can do an educated guess going, it's probably not going to be good. Will it pick some moves? Yeah, it will. But again, there's so many better rules and tools around that. So you look at stuff you find on the internet, and this is something common I find with people who come to us to teach them to trade. They spend 3, 4, 5, 6, 10 years on YouTube finding all these different techniques, and they don't know what one works in the right situation, and they're so confused because there's so many different tools and rules you can use, and their trading is ad hoc. It's very hit and miss. They have lots of losses. They're still unsure about what to get in with, what to get out with, and they need a real proper strategy. So sometimes what we do is we pull everybody back and simplify their trading and give them some solid strategies and a process, because a lot of people don't have that process. But let's go and look at A2 milk anyway and just see where that's going. As I said, I thought you entered way too early. There's nothing proving this thing has stopped falling away. And if you look at that low near where you bought was the lowest low. Because if you look at that lowest low, it's $4.97. Look at that. So that was that lowest low in that whole down move. So there's nothing at this point in time to suggest, now get rid of all these bars, they weren't there at the time. Your decision to enter was based just off that lowest low bar, and really, and that Wyckoff spring, you're saying that was a support level. Yeah, it probably is, but support levels get broken all of the time. And that's really where you need to be careful. Am I saying A2 milk's not going to go up from here? No, I'm not. Am I saying that A2 milk is bullish or bearish? No, I'm not. I'm just saying it could be consolidating through here, and eventually you could make money. But look at the bars here. All of them are showing a real lot of indecision. So wouldn't be surprised for me if it just tanked. But it wouldn't surprise me if it went up from here, or it wouldn't surprise me if it went sideways for a while. But it is the stock you should be in right now. I wouldn't have bought where you've bought, and I would be waiting. And I would be waiting for it to move right through this level. And you might say to me, there's a lot of movement between that level where it is right now, Dale, and where that is. You can see there's nearly 40%. But until it breaks above that, it's really not telling you it's going to move up. And I would really only buy on strength. I need to know a stock's got strength, and I need to know it's got more movement behind it when I do buy into it, so that it is finally moving up. So I would rather give that bottom chunk away, because that's the high risk area that you've traded in. So I'd rather give let other people play in those areas and take it a bit higher, because I know that if I bought into this sort of stock at those levels, above those levels that I just showed you, there's a ton of room to profit, but more so the ton of room to profit safely. Trading is not trying to eke out the lowest buy price and the highest sell price. It's not about that. It's about taking safe profits in areas where you have a high probability the market is moving in the direction you want. And that's really what you need to take. So thank you for your email and your compliments on our show and what we actually do. But again, it's about getting better rules. And I think you probably used the wrong rule. And possibly in the wrong context. As I said, I don't know about your trading, but possibly you've used it in the wrong context. But there's so much better rules out there to help you trade. But thank you for your question. Now, the next question we have is from Gavin, who says, "Hi, Dale and Janine. Another great show. I'm glad you enjoy our shows. Can I please get your thoughts on James Hardie Industry, as it's had a similar pullback to the market? Where do you see it might find support? I'm not in it, but patiently waiting with interest. Thanks, Gav." So let's go and have a look at James Hardie. I'll put my glasses on. Let's bring up the chart right now. Interesting stock right now. Just stay out of it. It is simply, when you're looking at things like that, and really it's just sort of a flow on from the A2 milk is, I could give you a figure that says, okay, it's going to find support at around $40 or $30, and you'll go, hey, Dale says it's going to find support around this sort of level, around $40. Okay, because there's roughly a support line there, but what if it goes to $35, or down to $28, or down to $20? The thing is you don't need to worry about it. Unless you're technically really proficient, you don't need to know where the support level is. You just need to sit back and wait and just watch it every now and again. Once a month, have a look at this stock and just watch it. When it does find support, it starts to tell you whether it's finding support. Then it'll start to tell you whether it's going to fall further through that support level, or whether it's doing a movement in the opposite direction to the downward trend before it falls away again, and we see that. So let's have a quick look at the chart and I'll show you what I mean. So you could have probably said that might be support level there in the 28th of January. You can say, okay, well, here's some levels right here. So there's a peak where my pointer is, and you can see here that bar, it hit pretty close to that. There's also a trough around there, there's also a peak around there, so roughly a support level. It went up for 2 weeks and it's fallen away again. So I could have said that's a support level, and people jump in thinking a stock's hit support only for it to fall away. So right now is while a stock's falling away, unless you're trading short, don't worry about it. It's simple. Let it keep falling away and keep falling away and keep falling away. And if you'd practiced these sorts of rules, or that I'm talking about, you would have stayed out of things like Telstra. I'm not saying you did, but a lot of people kept buying Telstra as it was falling away for over 10 years. And there's numerous stocks that have fallen away for multiple years that people just kept buying every time it sort of hit a support level, went up for a few weeks, only to fall away again. And obviously, and AT Milk's one of those. People kept buying that on that whole downward move. And as you saw, people are buying that now, thinking it's found support, but it's not proven that it's a found support. It could be just consolidating or distributing at a period and then fall away again. So it could be doing that. So right now, I just stay out of James Hardie. Right now, it looks like it's falling away. It looks like it's got further to fall. How far it falls, I don't know. I do know, but I'm not going to share it with you because it's not relevant, because as every day goes on, I get news, more data, more bars, more information on the stock. So I might give you a figure today that's going to fall to whatever price it is, and then over the next couple of weeks, more data comes out, and then I revise my decision and go, no, it's probably going to go to here. So again, it's not wise. Until it stops falling, stay out of it. It's pretty much, it is what it should be. The next question that we got is from Josie. I'm not sure whether it's a gentleman or a lady. I do apologise for that, but Josia, I think, is the name. While you are not predicting a crash, you are correct. What are your opinions regarding Ukraine crisis, the potential for broader market global suffering, i.e. oil prices increasing, inflation increasing, the cost of production and consumption increasing, governments raising interest rates, etc.? Surely that would have some effect on the ASX, irrespective of what sector, industry you're in. Yeah, you're pretty much right. And economic factors do affect the stock market. They do. But the jury's really out on what wars do, because it's really hit and miss with wars. Some wars, the market's a little bit affected, but I know there's a lot of bearish news out there. And as you can tell, our mainstream media feed us BS all of the time. And they do sensational headlines to get us to continue watching it. That's what they do. It may not actually turn out to be that way. Now, obviously, there's a lot of bearish news around because of the war. There's last month last few months, it's always been about inflation. It's the Fed's come out saying last year, I think the last quarter last year, there was going to be 2 interest rate rises in 2022. In January, they came out and said, it might be 4, and they haven't raised it yet. And yet, if you go and look at the economics of the US, the employment rates are out, the employment figures are down a little, unemployment figures are down a little bit. There's a whole range of things down a little bit to suggesting inflation may be coming down in the US, and that's only the recent data. Now, obviously, that's from February, before the war, Russia invaded the Ukraine. So those figures are before that. But it doesn't mean they're not going to go back up again. And all I'm saying is the economics are still looking pretty good. But again, I don't make decisions on the stock market based on what's happening around the globe like that. I look at my stocks, they'll tell you, because people smarter than me are already making decisions. People, the big $1 trillion fund managers, are already making decisions. And around the world, they are the biggest investors in stock markets around the world. So if they're worried about the stock market falling away, they're already selling. And we'll see that on charts. So regardless of inflation, regardless of interest rates, regardless of all the other economic factors, Australia's not doing too bad. The economics on Australia are pretty good at the moment. And, our inflation rate's around 3.5% at the moment. Yes, oil may go up, but then you've got other countries that do supply oil that will increase production, possibly the US being one of them. Obviously, the UAE or those countries may increase their supply of oil to keep the prices under control, because you've got to remember there's a lot of politics at play when there's wars going on. I mean, obviously, if oil prices go up, that benefits Russia and benefits Putin because they have a lot of oil, but the rest of the world might be going, well, we don't want that to benefit you. We want to keep the economic pressures on you, so we're going to release a lot more oil to bring the oil price down to have an adverse effect against you. So there's always cause and effect right across the board. But again, simplify your life. That's all I'm saying is keep it really, really, really simple. If you own stocks, they'll tell you whether they're going up and down. If you don't own stocks and you're looking to buy, they'll tell you whether they're going up and down. And the market will tell you what's going on. And right now, if the market was going to crash, because of what was going on with Russia and the Ukraine, they would have already started doing that, 2 weeks ago. We would have seen a big fall out of bed, and we didn't. Our market didn't. The US market didn't. I'm still suggesting the US market is weak and it's still going to come off, and I'm still suggesting our market still may fall and may fall below that 7,000 points, like I mentioned at the start of this report, and it could go to 6,800. But I think the rest of the time our market will be really good, because remember, with wars, there's a supply chain that has to happen with wars. Weaponry needs to happen, and troops, you name it, a whole range of things got to support a war effort. So a lot of stuff's got to happen now. Obviously, this is just Russia and Ukraine, and obviously the world is not supporting this at the moment. Russians pretty much on their own to some degree. There's a couple of countries that are not outwardly supporting it, but they're not outwardly condemning it, China being one of those. But the end of the point of the day is, right now, we're not in a world war. Whilst we're in a precarious situation and a sensitive situation, and I don't want to over dramatise this or under dramatise it. I'm just saying, because I'm not an economic expert like that or expert on wars. I'm just saying right now the world is in that a period where things could go either way, but the world is standing up at the moment, and individuals like us are standing up to voice our opinion against Russia. Even the Russian people are doing that. So it remains to see how this plays out, but it's either going to be a bigger war or it's going to go away, one of the two. And at the end of the day, the stock market will reflect whatever that is to some degree. But making decisions based on fear of what might happen is never a good thing in the stock market. As you heard in the first question that we had, doing things out of fear is not a good place. I'm not suggesting you do that, but right now, just sit back on your hands, just watch, and if you do own stocks, make sure you've got an exit strategy. If you want to buy stocks, make sure you're picking really, really good stocks at the moment. But thank you for sending in your email, and thank you to everyone for sending in your questions this week. But unfortunately, as is the case every week, we can't answer everyone. There's probably about another 5 or 6 questions that we got that I couldn't answer. Now remember, to get your best chance to have your email answered on this report, you need to publicly subscribe to the channel and then type your question below. And I know it's a publicly subscribed because there's a little red icon next to your name. So if you don't have one of those, you're not publicly subscribed. If you do that, then I'll know you're publicly subscribed and you are a supporter of the channel. And then I'll also, and I read those emails out every single week, so they're the ones I always do. Now remember that here on this channel we do these Monday stock market reports each and every week. We also do our live stream, our live Australian stock market show, which is on every Tuesday night, 7 to 8 p.m. Australian Eastern time. So I'll see you tomorrow night. Now, so last thing you need to do, hit the subscribe button, give us a big thumbs up, click the bell on the right of it so you know when we upload and go live. But that's it for me. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.